Finally, one more thought. Children cannot rest till they get rid of their money, or as we say, it burns in their pockets. According to the Oxford English Dictionary, that's the first reference to money burning holes in pockets, and it dates back to 1768. These days, it seems that there are quite a few children with burning pockets, starting with WeWork. Only 2 short years ago, investors, including the legendary Masayoshi Son, couldn't wait to get money into the pockets of the real estate startup. And JP Morgan couldn't wait to get tens of millions of dollars into the pockets of founder Adam Neumann to buy luxury homes.
They have a long-standing relationship with Adam Neumann himself. So JP Morgan has been leading something akin to a margin loan, where he's been taking out loans based on his private stock.
But then questions were raised about the WeWork business plan, and a massive IPO turned into a much more modest SPAC.
It had to undergo a major restructuring. Well, that restructuring has just been complete. It did go public via SPAC in October of 2021. Sandeep Mathrani took over, and he did try to right the ship.
And now even that's gone by the wayside, as WeWork made it official and declared bankruptcy this week, leaving Masayoshi Son of SoftBank about $11.5 billion lighter in his pockets.
WeWork, at its peak, 2019. Here's a company that gets valued in private markets at, what, $47 billion. And here we are 4 years later and the company's filing for bankruptcy. And in the meantime, we know, based on reports, that Adam Neumann, the founder of the company, has managed to take in hundreds and hundreds of millions of dollars.
20 years ago, Donald Trump, long before he was president, was eager to get money into his own pockets to buy the Doral Golf Club in Florida, as well as a hotel and skyscraper in Chicago. And Deutsche Bank seemed eager to give him his wish, loaning him a total of $232 million, backed by his telling them he had assets worth $4.3 billion. A New York State judge ruled that his assets were actually worth far less. And this week, Mr. Trump appeared before a New York City court deciding how much he owes in damages, which may leave a bit less money in the former president's pockets, despite his spending much of his time on the witness stand, badgering counsel and even the judge himself. But in the end, it may all have been worth it, as Bloomberg reported this week that Mr. Trump's net worth has actually gone up $500 million since he left office. And that brings us to what may be the biggest pockets of all. We learned this week that the most famous investor of them all, Warren Buffett of Berkshire Hathaway, has amassed a record $157 billion in cash, an amount that would burn a hole in just about anyone's pockets. It appears that Mr. Buffett can't find any deals that make sense at the prices on offer, leading us to wonder how long he can wait before deploying some of that huge pile of dry powder.
I am curious about that cash pile. When do you think, Gregory, it will be the right time to really try to deploy a big chunk of that $157 billion?
But if we've learned anything at all about Warren Buffett, it's that he never feels the burn of money in his big pocket. He'd rather keep it where it is than invest in things like WeWorks or loans to real estate developers with uneven records.
I'll have a sausage McMuffin with egg and cheese. $3.17 is a bacon, egg, and cheese biscuit. The market's down this morning, so I think I'll pass up the $3.17 and go with the $2.95.
That's why he's Warren Buffett, and the rest of us are not.